If you're following YouTube, the sky is falling. Apparently, according to many different YouTubers, the sky is falling. The market is going to collapse. This is it. Brace yourselves. Doom and gloom, etc. There's a never-ending stream of, and this is literally just from this month, right? This is literally just from this month. You can see the number of doom and gloom, the sky is falling, prepare yourselves for the crash, etc., are all here, right? But if you actually look at the market, the current market looks like it's going up. Looks like the market's actually kind of poised for a little bit of a breakout. Especially we're still seeing good volume in the Dow. Same thing in the S&P and in the Nasdaq. We're still seeing good buy volume coming in. And so as a result, talking about last time, I think on my last video, I talked about how the market was holding 26s. You can see it kind of right here where the market was holding 26s for several days here back in July. And then we see what was your resistance then became your support. You can see that right here, right? On these 2 days, and then the market subsequently that was having a hard time breaking out of what looked like about 27.3. And I think if we kind of look back, 27.3 was a little bit of an area where you can see right here where the market just couldn't 27.3, and we'd come off again, we'd come back up to that about that 27.3 mark, fall off, and then finally we see a little bit of a breakout here, and then coming back to that 27.3 just about, and we see the market holds. You can see that right there. And of course, subsequently the market came back down. We see somewhat similar levels like around here, market holding, hitting 27s and then kind of backing off. And so that's kind of where we're at in terms of the stock market. In terms of the stock market, looking at the Dow, I'm thinking the market is probably going to break out again. This is just my opinion. I've been doing this for the past couple of months on YouTube, but I've been doing this for several years. In any event, just looking at the charts, we're seeing where the market has been holding. Liquidity in the market is still there. As a result, I put the remaining balance that I had. I think I had about 1,500, added that and then some to the portfolio. This is basically my update for my M1 portfolio. We're up about 600, 150 so far in dividends. This is a somewhat slash growth, but it's most of the money, of course, is into dividends. So this update is basically just talking a little bit about, there are always going to be those who are, doom and gloom, the sky is falling, this is it, prepare yourself sort of mentality. And of course that gets, clickbait views for YouTube. But I think a good point to remember is what always, Warren Buffett always talked about: when people are afraid, when there's blood in the streets, I'm a buyer. And so I would say kind of take the same sort of mentality. If everybody around you is telling you this is it, take your profits, time to get out. I mean, look at the NASDAQ. The NASDAQ, when people were getting out of tech and they were like, market was reaching highs, and people were pulling out, and we're seeing a lot of these tech companies that are breaking out, right? SQ, a lot of these stocks, Chegg, another stock. We're seeing a lot of breakout in companies that are just not as affected by the coronavirus. And of course, where we're seeing stocks that are being hit would be like LTC, retail, property management, real estate stocks, and of course things like Play, restaurants, for like Dave & Buster's. Dave & Buster's looking poised for what looks like a little bit of a breakout. We've been kind of sideways for a little bit. We were here before, came back out. We might see a little bit of momentum to the upside. Same thing with GPS. I had been speaking about GPS for a little bit. GPS holding below that 13 level, looking also like it's going to break out. We're at 14 now. I'm actually looking more than likely to sell, but I haven't been speaking about GPS when it was down here at 7 and 8. The reason being is I want to roll that money over. I don't like the way the stock looked. Just looking at the daily when the market was ripping back in 17, 18, and 19, the gap was sliding. Just my opinion. So the money that I have in GPS, I've got a little bit of money in my risk portion, my risk portion of my portfolio, and it was just a little bit of money, a couple $100, and I'm up as you can see on the money, about on the 500 invested, I'm up 166. So I'm looking to take profits. I think TSM I'll hold. I'll have to wait and see on the, I think I put in about less than 300, and I'm up 134 on that one. I kind of still waiting for the cruise lines, right? Like NCLH, Norwegian, and CCL. MGM, I may roll some more money over into that one. And of course, I'm adding more to tech, because I was wrong. I had tech in my portfolio right up until the market hit 27K. I sold most of my tech when the market hit 27K, and for a good reason. It came back down, but tech, like especially things like Apple, just kind of kept on going. We did see like a little bit of a pullback, but then they just kept on roaring higher and higher and higher. So I just jumped right back in. So I'm still holding things like Play. I'm probably going to end up putting a little bit more money into Dave & Buster's because I do like it. I think they have a good business model. We'll have to wait and see what happens with the coronavirus. It's highly politicized right now, especially in Democratic states. If you're watching, it's like the moment cases spike, they're like, well, we got to shut everything down. But the numbers in terms of people who are dying are very low. We're seeing very few people who are dying, less, of course, in comparison to the state that I live in here in New York. That's primarily because, one, there's a little bit more understanding of the virus. Two, there's a little bit more medications that are used for therapy. Supposedly remdesivir is being used. There's the controversy with the hydroxychloroquine, vitamin D, and vitamin C. And so what we're seeing is more political than it actually is the science. People are refusing to kind of follow the science, especially what we're seeing now, where in New York City, they're refusing to open up schools. The teachers don't want to go back to work. They don't even want to do online for whatever reason. They don't even want to do online. And so we're seeing a hijacking basically of the economy. It's not because of the coronavirus. It's not because of the coronavirus. It's primarily because it's politicized, and we're seeing a hijacking of the country by certain groups for their own agenda. And it's not really related to just, people are dying left and right. The numbers don't show that. The numbers of those who are dying don't show that. Typically, the individuals who are getting sick are individuals who are elderly, past the prime, past the life expectancy. People who are in their 80s and 90s, and maybe even in their 70s, are of course losing their life. Of course, that's not to diminish their value, but realistically speaking, in terms of having to shut down the economy and millions of job losses, thousands of businesses, store closures, etc., there's no reason for it, for what's going on, what we're seeing within the virus, with what's going on with coronavirus. And so that's why I'm still holding on to things like Play and CCL and RCL. I think they will come back. I think probably over the next couple of months after the presidential elections, a lot of what's going on politically will more than likely go away. That's kind of what I'm betting on. I think Trump will win hands down in 2020. Biden doesn't seem to have the mental capacity. Just kind of looking at some of the clips on Twitter show that. But in terms of the market, in terms of the dividend play, my goal for the end of the year, like I said before, was to have at least $100 of monthly income coming from dividend plays. And so I think for this year, I wanted to get to 6.75 dividend returns. And so I kind of went through a lot of different stocks, picked what I thought would be stable with upwards potential. And so this is basically what I came across. So for the end of the year, we're shooting for just about 20,000 invested primarily in our dividends. I'm going to be making some adjustments, of course, because I do have things like CCL that currently doesn't pay a dividend, Foot Locker that currently doesn't pay a dividend, and you can see I am down in those. And Foot Locker I'm slightly down in. I will more than likely move out Verizon. I did add BEP because I will more than likely be selling 1 to 2. I'll probably be selling EPD and BP, and then just holding on into Enbridge. I think Enbridge is the better play. I did move in to Southern for, that's basically another utility for electricity. And then I wanted renewables, and I like BEP. BEP pays a solid dividend. It is currently slightly depressed. I wish I had gotten in earlier. My fault for not being on top of that and doing the research. And I also went into Prudential. I know Warren Buffett went with Bank of America, but I kind of like Prudential, and they also pay a solid dividend. Prudential pays a really good dividend, so that's kind of where I put my money. I may roll out of Wells Fargo because I find them to be a little bit more risk for what they're worth. So I may roll that money out and may roll that right back into Prudential. If I get a little bit of an upside in Wells Fargo, I'll probably just roll that money right into Prudential. I think they're a much better play. But that's basically what I'm shooting for the end of the year. So for the end of the year, we'll have, in terms of dividend play, 20,000 invested with 1,400 in annual income, and then pulling out the trusty calculator. That puts us well above where I was shooting for. So that 1403, we'll just even that out to 1,400, and then of course divided by 12. So that comes to $116 every month in income. And of course, we'll have to wait and see how that plays out. I think the most important part for me is paying attention to what the charts are and buying value in stocks that are currently depressed. Like I said, with Wells Fargo, even though we are holding down here on the lows, I'm very skeptic about Wells Fargo. I kind of do like Prudential a bit more. It looks like it's looking for a little bit of a breakout. I had wanted to buy it yesterday at the open, and I put my order in late, and of course I couldn't buy it, and it was all the way down here at you can see right here, it was literally holding those 64s, and I tried to put the order in right away, and as you can see, up 5%. So it would have been nice to get in early. Unfortunately, I ended up getting at the end of the day at 3 o'clock because I've only got the window between 9:30 and 3. I wish I had put my order in early, but of course I did that late. So this is basically the goal for the end of 2020 with invested dividend portfolio of 20,000 with just about a 7% return. I was shooting for 6.75. For next year, I want to try to reach that 7.25 in terms of dividend returns. And then of course try to step up from, I think we're going to be at 116, and we'll see if we can go 2021 first quarter. My goal is 150. My goal for 2021 first quarter, 7.25 with 150 in dividends per month. And we'll see how much that's going to cost me, probably about another 5 or 6K. Anyway, just a quick update. I know there's a lot of doom and gloom. There's a lot of people talking about the market crashing, etc. But realistically speaking, looking at the market, I'm thinking that the market is more than likely, like I said, market looking like it's trying to break out, maybe retest some of these old highs that we made back in early 2020 and 2019. I think the market is looking like it's going to break out, especially if Trump wins. I think the market is going to take off. With that said, thanks for watching. Feel free to like, comment, and subscribe. If this is your first time checking out my content, be sure to subscribe so that you don't miss out on future content. Thanks for watching. Take care.